Welcome to the Daily Vibecasting. Today's feed is absolutely packed, and things are moving incredibly fast. We're tracking Elon Musk dropping just enormous AI leaps, seeing capital markets flashing some really suspicious warning signs, maybe pointing straight back to the 70s. And yeah, the totally wild $30,000 question about outsourcing your baby's identity. This is your rapid-fire deep dive into what is buzzing right now.
It really is a unique convergence today. You've got this hyper-exponential tech growth smashing up against, well, financial anxiety and these extremes of, like, cultural affluence. We're boiling down some complex, fast-moving info into the core insights for you.
Okay, let's jump straight into the machine then, because the goalposts for large language models, they just got, thrown into the next county.
Right.
Starting with this post from @Elon Musk. Grok Fest now has a 2M token context window.
Right, this is a huge development. We really need to clarify just how big a deal this is for you listening. A context window. It basically defines how much info the AI keeps in its short-term memory, during one chat. When Grok jumps to 2 million tokens, that's not just a bigger number. It's a functional revolution.
Okay, functionally. So what does 2 million tokens actually translate to for, a regular person? How much text are we talking about?
Think about processing roughly 1,500 pages of text. That's
Yeah.
like 5 or 6 full novels. And crucially, without losing track of the context or, some specific detail mentioned way back on page 1.
Wow.
Our sources are saying this gives Grok something like a 5-fold advantage over models like ChatGPT. And it directly tackles a major bottleneck. See, competitor models, they often struggle with quality coherence. Once you get past maybe 300,000 tokens, their memory starts to decay.
Right.
Grok focusing on this scalable deep memory, it fundamentally changes what these systems can reliably do, especially with long-form data analysis.
So it sounds like they're really setting up the hardware for, well, truly advanced autonomy down the line, which leads perfectly to the software timeline. This next post, it's about AGI, and honestly, it's giving me chills. It's from @DanielMac8. Julian Schrittweiser says AGI by 2026. He was first co-author on AlphaGo, AlphaZero, and MuZero. He is an AI researcher at Anthropic. Here's what he predicts in failing to understand the exponential again. Guess what physicists thought about quantum physics initially?
Yeah. When someone who co-authored the foundational papers for AlphaGo, the system that beat the world Go champion talks timelines, you have to pay attention. Schrittweiser isn't just, guessing here. He's using autonomy benchmarks based on his deep history in the field.
But hold on, isn't AGI by 2026 kind of the standard aggressive claim we hear almost every year? Why trust this timeline? What's the specific data making him so bullish?
That's the critical question, right?
Yeah.
His argument, it uses the analogy of early COVID-19 cases doubling. Initially, the speed seems small, almost negligible, but the exponential curve means once it hits a certain point, the scale just explodes, seemingly overnight.
Okay.
He's suggesting we are basically misjudging the current doubling rate of AI capabilities in the same way. Specifically, he predicts AI will be able to autonomously work full 8-hour days doing tasks that need multi-step reasoning by mid-2026.
An 8-hour day, that's basically a functioning digital colleague.
Precisely. And he suggests by the end of 2026, AI will match human experts in many fields, then actually outpace them by 2027. It's an argument for, immediate data-driven reassessment. He's urging us not to fall for that mainstream skepticism that always discounts exponential growth.
Okay, wow. If the timeline is that aggressive, let's look at the battlefield right now, the near-term model releases. Just in the next few weeks, the roadmap is getting seriously crowded, fast. From @CultureGasks. Some model updates. Gemini 3 experimental's current target is 9th October. Claude 4.5 is currently 1-2 weeks away. Not next week.
Let's unpack this strategic crowding a bit. That Gemini 3 target date, October 9th, that's highly significant. Why? Because it aligns perfectly with the speculated launch of the Pixel 4 watch.
Ah, interesting.
It's a clear signal. The race is on to tightly integrate the absolute cutting-edge AI directly into consumer hardware, not just relying on cloud access anymore.
Right. Tie the AI release to the gadget release. Maximum market splash. Smart positioning.
But look deeper at the details in that post. There's also mention of an enterprise-only update for Gemini 2.5 Pro. Now that signals a definite pivot towards specialized high-value business applications. Think finance, legal research, that sort of thing.
You're not just for consumers.
Exactly. They're challenging the idea that all the best AI access has to be public-facing.
Yeah.
By focusing on commercial deployment, they lock in that recurring revenue from specialized sectors. And maybe prepare for the huge cost of building the next generation of models.
Okay, the speed of this AI advancement, maybe it's actually fueling some of the anxiety we're seeing in the global capital markets. Let's pivot to the defensive moves happening right now. Check this out from @Kobesa. This gold run is absolutely insane. Gold just made its 38th all-time high of 2025, with gold futures now up plus 43% year to date. This puts on gold on track for its best year since 1979 as the Fed cuts rates into 3% plus inflation. Gold knows what's coming next.
Yeah, insane. Feels about right. This really raises a huge question. What is gold signaling when it behaves like this? The surge up, a phenomenal 43% year-to-date, is widely seen as this massive global hedge. Against what? Economic uncertainty, sure, but also against persistently high inflation.
In that comparison to 1979, you just can't ignore it. That was an era of profound stagflation and geopolitical mess.
It's probably the closest historical echo we have. In '79, gold shot up 120% amid those twin pressures. High inflation, geopolitical tensions. What's really critical now is the current policy divergence. You've got the Fed actively lowering rates even while core inflation is sitting stubbornly above 3%.
Which is unusual.
Very unusual. It creates this deeply negative real rate environment, right? Makes holding cash really unattractive. So the metal is reacting strongly. It's like the market is saying the central bank seems to be prioritizing growth over price stability. Gold knows, as opposed says.
Okay, now let's talk about a different kind of financial move. One that feels, well, it borders on outright criminal. From @Unusual Whales. Look at this. Just before the announcement that Electronic Arts, EEA was to go private, there was EA 180 calls expiring literally next week on 1003. They were early volume at around $0.37 per contract. They sold for nearly $15. They made nearly $1 million in less than a few.
Whoa. Nearly $1 million made in just a few hours. The timing. It's textbook suspicious. It lines up perfectly with the news of a potential $50 billion private buyout involving Saudi Arabia's public investment fund. This isn't just, a lucky trade.
Yeah, that's incredibly hard to dismiss as just coincidence. Can you explain why that specific contract, so far out of the money, expiring next week, why is that such a classic red flag for someone having non-public info?
Absolutely. Okay, so when an option contract is that far out of the money, the stock price has to jump significantly just to reach the strike price, $180 in this case. And it's expiring in days. It carries almost zero intrinsic value. It's basically a lottery ticket.
Worthless unless something huge happens.
Exactly. The only reason you'd buy that lottery ticket in large volume is if you somehow knew the winning numbers were about to be called. It immediately throws up massive red flags for insider trading. Our sources confirm something like 10 to 15% of really unusual options activity often happens right before major corporate events like buyouts.
So if the timing and the trade itself just scream illegal, why do regulators seem to struggle so much catching these kinds of informed traders?
Well, it's the sheer velocity and scale. You have thousands of options trades happening every minute. Only a tiny fraction can be monitored in real time. These traders, they often use shell corporations, different brokers, act within a really narrow window. It's tough. The $1 million haul here, it just underscores how difficult it is for regulators to distinguish between, say, highly sophisticated legal trading and illegal activity after the fact.
Okay, we've seen the market stress. Let's shift gears now, maybe to the culture of hyper-affluence, especially in the Bay Area, where wealth seems to take the strangest forms. Starting with a post that just blew up the feed from @Padezi. There's a woman in San Francisco who charges $30 to name your baby. She started at $100, but she was going to dinner with VCs, and a friend told her to charge more, and nobody blinked. The Bay Area might be the best place in the world for this kind of business.
Wait, hang on. $30,000 to name a baby. That's not just a luxury service. That feels like a whole new echelon of niche outsourcing.
It really does. And it seems to reflect this unique cultural trend among, affluent tech elites. They outsource these highly personal decisions because of what researchers have actually called parental decision paralysis.
Parental decision paralysis. Interesting term.
Yeah, and the entrepreneur, this Taylor Humphrey, she apparently scaled her pricing that dramatically after a VC dinner suggestion. It basically confirmed that for this group, the price elasticity is non-existent. Nobody blinked at $30.
But is it really paralysis? Or is it maybe just the ultimate luxury good? You're buying back cognitive bandwidth, buying back time. The goal isn't just getting a unique name. Maybe it's offloading the mental burden of all that research, building consensus with your partner so you can focus on, running your tech company.
That makes sense, too.
It feels like the ultimate commodification of identity. And yeah, it probably only thrives in an entrepreneurial climate where disposable income is just astronomical. And time is genuinely seen as the most valuable asset you have.
Right. Okay, on the sort of opposite end of that wealth accumulation spectrum, we've got some entrepreneurial advice. This is focused on intense, almost ruthless sacrifice. From @Alex Hormozy, you should spend 100% of discretionary income and time on learning how to earn more until you have the income you want. Then do whatever you want. Fastest results come from wanting less. Second fastest come from learning more.
If we connect this back to that bigger picture of efficiency and focus, that's a pretty uncompromising philosophy, isn't it? But research actually kind of backs up this high concentration approach. People who really prioritize continuous learning, skill acquisition over just consumption, they see roughly 20% higher income growth over, say, a 5-year period.
And the wanting less part, how does that fit in? Does that align with what we know about mental capacity?
Exactly. Reducing unnecessary desires, eliminating all those consumption choices, it lowers your decision fatigue. It frees up mental energy for your core tasks. Behavioral science supports this too. Shows that a reduced decision load can actually accelerate goal attainment by as much as 15%. So it's a philosophy that really prioritizes capital accumulation and mastering one thing over, current comfort or having scattered interests.
Speaking of comfort, let's look at one of the more famous corporate perks out there. From @Mark Gurman. Tim Cook gives employees Thanksgiving week off, as is typical in latest internal memo.
Yeah, it sounds like a fantastic book on the surface. But the contrast is what's really interesting to me. This policy, it's been standard at Apple since way back in 2011, and it stands in really sharp relief against the U.S. norm, where what? Only 54% of private sector workers get any paid holidays at all.
Wow, yeah. That's a staggering difference in corporate generosity.
And crucially, our sources note how Apple handles the excluded groups. Retail staff, Apple Care support, people who can't take the week off for operational reasons. They apparently receive 3 extra paid days later in the year.
Okay, so they make up for it.
Yeah, it reflects Cook's commitment, or at least stated commitment, to prioritizing family time and employee well-being over just holiday commercialization. It fundamentally challenges the trend set by competitors who, push for aggressive store openings, maximum holiday selling hours. It's arguably a strategic investment in loyalty.
All right, let's close out today with some global shifts. Travel efficiency and a glimpse of future tech. The latest rankings for air travel in Europe are out, and they seem to indicate some major shifts in the global transport hierarchy. From @Spectator Index. Best airlines in Europe 2025, 1 Turkish Airlines 2, Just Air France 3, Just Swiss International Airlines. Just reading the top 3 there.
Turkish Airlines at number 1. That immediately stands out, doesn't it? This isn't just about marginally better service or slightly nicer seats. This is about strategic national infrastructure really paying off.
How so?
Well, they've successfully leveraged Istanbul's massive new airport, cost $12 billion, and has 90 million passengers a year. That huge hub capacity lets them strategically expand routes, increase frequency. They're successfully outpacing many of their established European rivals.
And the complete absence of any U.S. airlines in the top tiers. That's also a key signal, right?
Absolutely. It aligns perfectly with reports showing a significant decline, something like 15% in U.S. carrier service quality scores recently. And that decline is largely blamed on aging fleets and these ongoing labor shortages. It directly contrasts with Europe's investment in newer planes and staff training focused on efficiency and service.
Okay. Shifting gears to future tech that feels very present. We are definitely living in the future, especially when you look at how tech intersects with just the mundane task of parking. From @WaitButWhy, went to the mall today and in typical form failed to note where I parked. Instead of looking for it, I tried something crazy and summoned the car from the Tesla app. 30 seconds later, the empty car emerged from one of the lanes and pulled up in front of me. We live in the future.
It's a cool story. But what's really fascinating here, beyond the convenience, is the underlying safety data that sort of supports this seemingly futuristic feature. This smart summon thing, it's part of the full self-driving suite. It reflects that rapid move towards software-defined vehicles where the car operates autonomously without human input, at least in these non-highway settings.
So how do we balance that incredible convenience with, the ongoing debates about autonomy and human oversight? What do the actual numbers say?
Well, the numbers give a critical perspective. Tesla's own data, they report a crash rate of 1 per 963,000 miles for autopilot users, which is actually significantly lower than the national average for human drivers. That stands at about 1 crash per 702,000 miles.
Lower, okay.
Yeah. So while those edge cases always generate headlines, the statistical capability itself is a powerful demonstration of the tech's readiness, and it's driving that push for greater autonomy.
All right, finally, a pairing I genuinely never expected to see in my feed. From Sinsmanins. Honored to be invited by His Majesty King of Bhutan's to enjoy a rare live performance by Yo-Yo Ma in the mystical, spiritual Himalayas mountains. And talk shop about crypto.
Okay, yeah. That is a photo up that just screams cultural contrast. The cello master and the crypto giant.
Yeah.
Wow. But setting aside the bizarre visual, what does having the King of Bhutan and CZ talking shop actually tell us about geopolitical adoption of decentralized finance? Is this a real signal or just like splashy PR?
Well, given Bhutan's history of strategic, often quiet investment moves, it feels like it could suggest a strong signal.
It's exactly my thought. This links directly into Bhutan's known strategic crypto pivot. Remember, Bhutan is famous globally for prioritizing gross national happiness over just pure economic metrics.
Yeah.
Yet, they now hold over $600 million in Bitcoin as part of their national portfolio.
600 million. Okay, they're not just dabbling then.
Not at all. They are strategically hedging their national treasury. And furthermore, they launched a national crypto tourism payment system with Binance Pay back in May 2025. The idea is to enable seamless, cashless travel, bolster their economy. It shows even nations prioritizing well-being are aggressively adopting digital currencies for strategic financial growth.
We have covered an incredible amount of ground today. Just
Right.
from 2 million token leaps in AI shrinking that AGI timeline to nearly $1 million options trades done in minutes, and these cultural extremes where hyper-affluence is literally commodifying personal decisions like baby names. The velocity and just the sheer breadth of these global shifts, it's truly startling.
And they are all interconnected, aren't they? We've seen the market react defensively, the gold surge to high inflation and policy divergence, while simultaneously witnessing technology moving at this exponential pace, Grok, the AGI timelines we discussed. So here's the thought. If those AGI timelines really are shortening, accelerating disruption and wealth accumulation even further, how quickly will the societal norms we just talked about, like paying $30,000 to outsource your kid's name or relying on just 1 week of vacation a year, how quickly will those start to feel truly deeply outdated? That's something for you to maybe mull over as you process today's data points.